What's up, everybody? My name is Zach Pasquarello, and in this video, I'm going to talk about all of the benefits of an S corporation, and also I'm going to show you exactly how you can file the IRS form so that you can elect to be taxed as an S corporation for your LLC. If you are a business owner, this video is going to be perfect for you. I'm going to show you exactly why you should elect to be taxed as an S corporation, and if you are a bookkeeper, this video is also perfect for you. You can use all of these lessons and incorporate these into your own bookkeeping business. You can tell your clients about these benefits, and you can show your clients how they can fill out this IRS form. If you enjoy this video, please subscribe to my channel because I post new videos like this every single day. And if you need help, if you need a mentor, if you need coaching, there's actually a link in the description of this video. You can schedule a one-on-one consultation with me. Okay, so real quick, I want to talk about the benefits of electing to be taxed as an S Corp. So this is for all of my single member LLCs. And there's really one major benefit, and that's it's going to save you a ton of money on your taxes, primarily in the form of your self-employment tax. So if you don't already know, if you are a single member LLC, you are paying 15.3% on your net income in the form of self-employment tax. This is separate from your federal income tax. This is separate from your state income tax. This is for Social Security and Medicare. Now, one thing to keep in mind, whenever you do elect to be taxed as an S Corp, as the owner, you do need to pay yourself a reasonable salary. So you will have increased payroll processing fees and tax filing fees. However, you're going to save a ton of money on the Social Security and Medicare self-employment taxes. Now, with that reasonable salary, there's generally like a 40-60 rule. So typically, there's a lot of gray area when it comes to paying yourself a reasonable salary. The IRS doesn't give you clear guidelines, but from what I've heard, there's a 60-40 rule. So pay yourself 60% of your net income in the form of a salary, and then you can take the additional 40% in the form of owner's draws or distributions. Whatever you want to call it, is just money that your business has made outside of your salary. Okay, so let's give an example real quick. So this would be, now this is just a very basic example. This is not counting any tax credits or tax deductions. This is just a very basic example to show you the tax implications of an LLC that is not taxed as an S corporation. Okay, so let's say, for example, this LLC has $100,000 of net income. So the entire 100 grand is subject to this 15.3 self-employment tax, which means that you're paying $15,300 in self-employment tax. Now, we're going to subtract that from your net income, and then we get $84,700. Now, we're going to assume that you have a 21% marginal tax rate just to keep things simple. If you are making $100,000, your marginal tax rate is probably going to be close to 21%. So let's assume you're paying 21% in federal income taxes. So now we take that $84,700 and multiply it by 21%, which is your federal income tax. And we take $84,700 because you are able to deduct the self-employment tax from your net income whenever you're calculating your federal income tax liability. So now we have $84,700 times that 21% federal income tax rate, and we get total federal income tax of $17,787. Now add that to the $15,000 self-employment tax for a grand total of $33,000 just in self-employment tax and federal income tax. And this is for an LLC not taxed as an S Corp. Now let's look at an LLC that's taxed as an S Corp. So we have the same scenario, $100,000 of net income, but in this situation, remember that 60-40 rule I told you about. In this situation, we have a $60,000 salary plus $40,000 in distribution. So we take that $60,000 and you're going to have to pay that self-employment tax on your wages of $60,000. So now we have $9,180 of self-employment tax. Once again, we can subtract that from our net income of $100,000. So we get $90,820 times that 21% federal income tax rate. Now, this is the corporate tax rate for S corporations and C corporations. But now, just to keep this example simple. We're going to lump together your wages and your distributions whenever we're calculating your federal income tax, just to keep things simple. This is not a perfect example, but it will help illustrate the benefits of electing to be taxed as an S Corp the same. So the benefits are still the same. The numbers might not be perfect, but this is just hopefully a good explanation. So we're going to take $100,000 minus that $9,000 in self-employment tax. We get $90,000. Multiply that by 21%. And here we get $19,000 in federal income taxes. So we add the self-employment tax of $9,000 plus the $19,000 in federal income tax is $28,252. And if you remember, we were paying $33,000 not as an S Corp, and now we're paying $28,000 as an S Corp. So instantly we're saving almost $5,000 in taxes just by electing to be taxed as an S Corp. So we're making the same amount of money. We're paying a little bit of money for payroll processing. We're paying a little bit more for tax filing because we are an S Corp. We have to file an 1120S, which is a separate tax return for our S Corporation. So a little bit more complicated, but you're saving almost $5,000. This is huge tax saving implications. And now I'm going to show you exactly how to fill out the IRS form so that you can apply for an S Corp status. Okay, so this is the exact form 2553 that I submitted to the IRS this year. So I just elected to be taxed as an S Corp for my bookkeeping business. I'm going to show you exactly how you can fill it out. Most CPAs, most attorneys are going to charge you $400 or $600 just to fill out this form and submit this form for you. You don't need to pay them. You don't need to pay me. Don't pay anybody. You can fill out this form on your own. I'm going to show you exactly how to do it. So the name of your business right here, for me, Harrisburg Bookkeeping LLC, that's the name. You need your employer identification number, your EIN number. If you don't have that already, obviously you need to have that. So go to the IRS website, apply for an EIN number, and you need to have an address for your business, whatever the address is. I have mine covered up right here, but this is the address of my business. And then the date that you were incorporated. So you need to file articles of organization with your state. You need to register your LLC with your state. And whatever date you did that, use that as the date that you incorporated your business. And the state of incorporation for me was Pennsylvania. And then for here, right here, election is to be effective for tax year beginning. I filed this form for 2023. So I put the first day of 2023. And for section F here, I just chose number 1, select tax year, calendar year. That just means my tax year is from January 1st through December 31st. I would do the same thing. Okay, for this column, for this section G here, I didn't check that box. That did not apply to me. For section H, name and title of officer or legal representative whom the IRS may call for more information. I just put my name and I said that I was the owner and I put my telephone number. For section I didn't do anything here, and then I signed this title owner and put the date. Now at the top of page 2, I put the name of my business. Again, I put my EIN number, and then here I put my name, my address. I signed it here. I put today's date, 100 for the number of shares or percentage of ownership. The date acquired was 12/31, and then I put my social security number right here. And then the shareholders tax year, I also put 12/31 right there for December 31st. Now scroll down, and then the top of page 3, once again, my name of my business, my EIN number, and then for section O, you have to check box number 1, a new corporation adopting the tax year entered in item F, part 1. So you have to check that box, and I left everything else blank, I do believe. Let me just double check. Okay, so there you have it. I went over the benefits of electing to be taxed as an S Corp. You're going to save almost $5,000 if your net income is close to 100 grand. And I showed you exactly how to fill out the IRS form so that you can elect to be taxed as an S Corp. If you're making more than $60,000 or $80,000 in net income, this will benefit you. I recommend elect to be taxed as an S Corp. And if you're a bookkeeper, tell all of your clients that they could also elect to be taxed as an S Corp. It might help out your business.